And now it's my great pleasure to introduce our keynote speaker this morning, Mr. Kelsey Gunderson, Chief Executive Officer of Laurentian Bank Securities and Executive Vice President of Capital Markets. Kelsey Gunderson was appointed CEO of Laurentian Bank Securities in 2019 and previously held various roles at BMO Capital Markets and at Credit Suisse Group in New York and at CIBC in Toronto. Please help me welcome Kelsey to the stage. I'll be right behind you.
Okay. Is the other gentleman joining me after? There was some debate if he was coming or not. McKinsey guy.
Oh, yes.
Okay, good. Okay, good. Thank you. Thank you. Well, thanks, and good morning, everybody. Thank you for joining me today on what's the, as Joanne mentioned, the third and final day of the Mining Investment Event of the North. And before I begin, I wanted to send a special thank you to Joanne for her kind words and opening remarks, and for the excellent job she and her team have done organizing this event. I know, speaking to my team at LBS, pleased with the success, and it being the first of its kind. I think it's great to see. As CEO and President of Laurentian Bank Securities, one of Canada's few Quebec-based investment dealers, delighted to be here in person, seeing people face to face rather than on Zoom screens here in beautiful Quebec City. Weather certainly cooperated as well. Quebec is and has been a friendly jurisdiction for the mining industry, and our team at LBS, together with many of the other Quebec-based and Canadian-based institutions, stand together to ensure that the mining industry, receives the support it requires and deserves for the exploration, development, and production of our mineral assets. So I'm going to keep my comments brief today, but I would like to spend a few minutes on the current state of our mining industry and maybe a bit of a promotion about Laurentian Bank Securities and how we've been and will continue to support the industry here in Canada and in Quebec. And I think as you're hearing through the conference, I was looking through the agenda. It's very interesting to see some themes coming out, which you may not have seen in prior iterations of a conference such as this. I think that Canada and Quebec in particular are in a very interesting and unique position within the global mining industry, certainly at this moment in time. Obviously our companies excel in both the extraction and processing of minerals and metals. But what's increasingly important these days is they're doing so much more in a fashion which respects, the environment and the communities that we operate in. But also in supporting the industry through the capital markets, raising money, providing access to the markets, and again, what's increasingly important these days, bringing in a newfound corporate discipline around governance, both at the executive ranks and also at the board ranks, which I guess is the G in the G part of the ESG. And it's a big industry. In 2020, Canadian-based operations extracted over 60 different metals and other minerals across 200 mines, 6,500 sand, gravel, and stone quarries. So a very big employer, a very big contributor to the economy and to the Canadian tax base, generating a little under $45 billion of revenue, of which $12 billion contributed from what has arguably and traditionally probably been our most important commodity, and that's gold, of course. But beyond gold, Canada is a top producer of many other commodities, which I think are much more critical than ever before as we read daily headlines about geopolitical risk, hyperinflation, never mind the ongoing transition to new energy sources and industries. Canada is the world's #1 global rank in the production of potash, #2 in uranium, third in platinum, group metals, to name but a few. And on the green side, copper, nickel, cobalt, plus the rare earths and lithium are all Canada's a very important participant. Canadian companies are very important participants in those verticals. And I think as you'll hear shortly from Ken Hoffman, who's joining me after here from McKinsey. And I think as we're seeing real time, increasingly important these days, a safe, secure, and appropriately governed industry will be increasingly critical in the years to come as the world transitions the economy away from a carbon-intensive future and I think importantly is much more selective about where it does and chooses to do business. And here in Canada, we're particularly blessed because alongside of these essential commodities, the Canadian capital markets have been and are very active and sophisticated in supporting the global mining industry through advisory and financings. And I think that brings a uniqueness to the Canadian industry, which sometimes feels as though the world tends to underappreciate, and maybe therein lies the opportunity. Mining companies on the TSX and TSXV raised $45 billion in the 5 years leading up to 2020. That was 6,500 transactions. This is over 50% of the global mining financings and almost 40% of the aggregate mining capital raised globally. So very important participant in the global industry, and our markets are liquid. 57 billion mining company shares traded in 2020. That certainly seems like a lot, to me at least. 200 global analysts covering TSX and TSX-listed V companies. So again, providing great global visibility and liquidity to the industry here. So, that's a very sophisticated capital market, I think, tied to the assets themselves. So I mentioned these stats for a reason. We hear daily about inflation, and, while that's a complicated topic, at the best of times, never mind during periods of, maybe the end of the pandemic, hopefully, and certainly not anywhere near likely the end of the geopolitical tensions. But what's clear to me is that Canada will continue to play a crucial role in the solution by virtue of being blessed with not only the natural resources, but with the mature and sophisticated capital market. And I think that's going to be a sustainable role as well. As the world debate around ESG continues to mature, and Canadian-based companies with their higher focus, certainly on a relative basis, around governance, has an impact. And as that conversation continues to move to the forefront globally. And as the big blocks of capital out there, I'm thinking the sovereign wealth funds and pension funds increasingly look for ESG credentials to support their investment decisions. I think the Canadian industry is in a great spot and can approach that trend from a position of strength, and if done right, maybe even get a preferred access to that capital pool. So, the upshot is that we have the resources in this country. We've built a robust capital market traditionally to support that industry, and increasingly we approach this industry with a higher focus on ESG topics, and in particular governance, certainly relative to other parts of the world. And so then the question becomes, how are we going to ourselves take advantage of this moment in time to support the industry and to continue to grow in an outsized fashion on the global stage? I think, obviously we need to continue to find new sources of minerals and continue to explore, extract, develop, and export them in a responsible way, and that's not a shocker to anybody in this room. But I also think we're going to see a bit of a retraction. Two of the biggest trends, as I've been talking about today already, that we've witnessed in recent years in the mining industry and across all industries, frankly, has been, the introduction of responsible business practices, and it's certainly that in the case in the developed world. These are not only focuses on environmental regulation, but social issues, again, engaging with local communities and governance. And, I don't think that pressure is going to go away anytime soon, nor probably should it, although I do think that the risk of regulatory overreach, and unintended consequences are certainly a risk that one needs to pay attention to. And, the other trend, though, has been one of capital discipline. The mining industry writ large has certainly found a newfound capital discipline in recent years, something it traditionally did not have, highly leveraged to the boom-bust cycle. But in recent years, as in an effort to return more capital back to shareholders, I think the industry finds itself underinvested, which is clearly amplifying the price swings that we're seeing these days. To be clear, the geopolitical situation in Ukraine and China are certainly driving those swings. But I do think that the industry would be in a much better spot today to absorb those swings were it not for, what I think is chronic underinvestment over recent years. Example, Rio Tinto, reasonably important participant in the mining industry, only spent $40 billion in capex this year. That's versus $80 billion in 2012, and I don't think that's inflation adjusted. So when you think about that in a hyperinflationary environment of 2022, that's a remarkable fall in capex. Industry-wide, about $100 billion is being spent currently on CapEx, which some experts think is only around 2/3 what the industry really needs to support not only economic growth, but also the transition to a less carbon-intensive future. So I think, and I also think you're seeing a very interesting trend out there where, companies such as Tesla are securing partnerships or side deals to procure selected access to resources, which I don't think it's a particularly new phenomenon, and I'm not even sure it's even a problem, but it's certainly going to change the supply-demand dynamics across the world economy. And at some point, maybe this is where the government might step in and start to take note to ensure a healthier functioning of the global supply chain, certainly around commodities. But on the capital side, I do think that the market opportunity will support a shifting of the pendulum back away from what has been rigid capital discipline towards loosening up of that capital expenditure purse strings, so to speak. I do think the market's going to take care of that for us, but we here in Canada can support our mining industry, which clearly we're doing with conferences such as this, and supporting the explorers, supporting developers and leaders in production, which you hear today. But I think when we tie it into the ESG strength that Canada brings to bear, I think it's going to go a long way to attracting more than our fair share of that capital into our jurisdiction here. So, turning to us at Laurentian Bank, while we're a small but growing financial institution and group, we're certainly doing our part. We may not impact the global mining industry yet, but we can and are focused on supporting our core companies at every stage and in every jurisdiction where we have strong relationships, and particularly in Quebec. It fits with the strategy of the bank. We're not trying to be all things to all people, but we're focusing on where we can add value and focusing on Quebec. And as the saying goes, if you can't be good in your own backyard, where do you hope to be good? Our dedicated support for the mining industry is still relatively new. We only began our practice about 3 years ago when we brought on Joe Gallucci and his team to lead that team, and Joe is now leading our entire investment banking franchise across all of our verticals. We gave Joe a big challenge. We said, go out there and we want you to compete against the big dealers. That was a tough challenge for sure, but then nobody believed that Italy could win the World Cup, the Euro Cup against soccer. Okay, Joe, you got to stop putting these things into my speeches here. Anyways, but Joe's a big Roma fan, which he never lets us forget. Anyways, in the last 3 years, Joe and his team have built a very strong mining platform at Laurentian, providing support for the explorers, developers, and producers that the industry relies upon. Very simple strategy, though, he's brought to bear. Number one, supporting small and mid-cap companies through financing, research, capital and markets advisory, and M&A advisory. Building unique flow-through specific platform, providing financing advisory directly to early stage companies seeking to fund exploration of the next generation of deposits in Canada. And then number three, supporting Quebec's mining industry through financing, research, advisory, and bringing investment in from the outside of the province into Quebec to fund exploration right in our own backyard. So if any of that sounds interesting to anybody, please find myself or Joe or Cam or anybody on the rest of the team. We would love to engage and love to talk. It's been a successful 3 years, though. To date, we've done 120 financings totaling over $1.5 billion in proceeds, 45 hard dollar offerings, 55 flow-through offerings, capital markets and M&A advisory, and over 25 transactions. And again, that's from a standing start in 3 years. So that's a pretty impressive growth, if you ask me. Proudly advised on the combination of Eli Gold and Gold Royalty Corp., creating a new precious metal royalties company. That was one of our largest transactions. Also very proud to say that we advised on the merger of the Harfang and LaSalle exploration merger. Again, a small deal, but we think that's a very important step in consolidating the James Bay region of Quebec, which we think is a very underrated and underexplored region and will be and could quite possibly be Canada's next major mining camp. So watch out for that one. We also provide our clients with creative approaches to fund the development of the assets in non-value destructive and non-dilutive ways. We've advised on the 2 royalty-specific advisory mandates in the past year, which created and sold royalties in Quebecois assets to investors outside the province. Alongside Joe's investment banking team, though, we provide dedicated research, sales, trading, lending. Barry Allen, who's here today as well, providing research, covers 33 mining companies, a lot of whom are present here at the conference these last couple of days. And we also produce a biannual product called the Mining Watch List, highlights up-and-coming explorers and developers who are not getting, we think, the visibility they deserve. So I would encourage you all to find that and take a look. So with that, I'd like to bring the attention of the conference back to the focus, back to the focus of the conference, which is the mining companies that are presenting. Without the expertise of the people in this room and in the rooms adjacent, and the ones leading our exploration and development programs and those overseeing the safe and effective production of our commodities, our team at Laurentian Bank wouldn't have a business to grow and support the industry. So thank you for that. And more importantly, our country wouldn't have the great impact on the global production stage that I referenced earlier, and our markets wouldn't be as liquid and capitalized and robust as they are. As a senior leader in Laurentian's organization, very proud to continue the ongoing support that we have for the mining industry, certainly pushing for more financing, advisory, and research within the space, and sponsoring more events like this. I think it's better to come together like this rather than on Zoom and on Teams. So thank you all for coming to the mining conference, and with that, maybe I'll pass it to Ken Hoffman, who I believe is the keynote speaker, who's here to speak on strategies for critical metals.